Look in their tips for investment strategies in 2013, and not dissimilar to some of the things you've just been making mention there. That, as I mentioned a little bit later in the show. Julia, wanted for now, though, to get your thoughts on this market. And look, is this the kind of movements that we're going to be seeing, do you think, until we hit 2013?
Well, we've seen a fall of 0.2%, and today we did see the Australian market underperforming a bit on light volumes with just $3 billion worth of stock being traded. But really, three themes on the market today. First of all, some comments coming out of China, and this is something that the market's watching very closely. We have some new leaders in China, and we're looking for direction in terms of 2013 in terms of policies as well as growth targets. And some of the comments coming through do seem to support 8.2% growth in 2013. So the Shanghai Composite having a good day today, up by 0.7% after an extremely strong gain on Friday. Also in Japan, we saw the Japanese elections over the weekend. We saw the Liberal Democratic Party winning power, and that bodes well for risk assets in Japan. Really, this party is seen as being quite supportive of unlimited quantitative easing, and that's really the reason why the Japanese market is rallying, up by 1.5%, and the Japanese yen, of course, falling as that's diluting for the currency. And finally, the US, we're focusing in on the fiscal cliff, and that's really the reason why we saw US stocks falling on Friday. But we have seen the US futures during the Asian session doing quite well with a rise of 0.4%. Looking at sectors on our market, and it was the telecom and the property space which really outperformed, and that really tells you a story in itself. We saw ANZ coming out and tipping a 2% record low interest rate for Australia in 2013. So it does look like those high yielding sectors of the market regaining some favour later on in the afternoon, although we did see industrials and materials maintaining some of the gains. We have a look at some of the best performers as well. We do seem to be seeing some of the short positions being sold out in that mining space. We saw Paladin up by 8.4%, and there were a number of factors here, but a large amount of its stock is also short sold, so this contributes to some rises that we see when the price does start to go up. And another one is Bradcom, which was up by 7.6%. Its stock, about 6.6% of it is short sold as well. So it does look like there was some covering of short positions in the market. But one area that you didn't want to be in today was gold. We saw Integra down a massive 8.3%, Silver Lake down by 7.2%, and St Barbara Mines down by 4.8%. But all up, some low volumes, but lots going on in the market.
Look, just on that call by the ANZ today, 2% pretty much by the end of 2013. Do you see that being supportive of stocks? I mean, it's quite often we talk about a falling cash rate means more people will be looking for return, and equities start to spring to mind, particularly in light of returns that you might get for term deposits. Does 2% sort of represent a level that you'd expect to start seeing that really materialise?
We have a look at 2012. The reason why we've seen a lot of the interest rate cuts, probably a large amount of it is due to global factors, some of the uncertainty that we've seen in some of the largest economies in the world. But going into 2013, and I think the reason why the RBA will continue to cut is because of domestic factors. We're still seeing a relatively soft housing market. The Aussie dollar remains stubbornly high, making it very difficult for exporters. And some of those cyclical areas like retail as well as the media space is yet to turn. There are some very tentative signs that some of those interest rate cuts that we have seen throughout 2011 and 2012 are now starting to take effect in the marketplace. However, it still remains quite difficult for a lot of the areas of the economy, and without the mining sector growing as strongly as we're used to, that's another area which provides some downward pressure in terms of domestic growth. So I do think we will continue to see interest rates fall. Whether we will get to that record low of 2%, which is about 1% away from where we are now, is another thing altogether.
Julia, I mean, as Michael rightly says, I mean, Bain, for example, were pretty keen, looked at the books and said, nope, see you later.
I mean, this is a pretty horrible story for BILLABONG shareholders. We saw a $3 offer by TPG earlier on in the year. That was raised to $3.30 and then dropped to $1.45. We saw another offer at $1.45, and of course, both private equity companies decided not to go ahead after due diligence. We're now seeing an offer at $1.10 on the table. I'm very skeptical of whether an offer below $1.30 will be taken seriously by the board of BILLABONG, but altogether it's been a debacle, and I have to agree with Michael on how BILLABONG shares traded today. We have a look at the intraday graph of BILLABONG. That tells you a story in itself, and this is just the first 2 hours hours of trade. You can see once the AFR story broke on that $1.10 bid price for that Billabong bid, you can see exactly what the impact there were on the shares, and the shares didn't go into trading halt until a few minutes after that. So altogether, Billabong shares that bid at $1.10, a 17% premium to Friday's closing, but we saw the shares trading as high as $101.50 today. But altogether, the price, we have a look at Billabong, it's been trading around about just under 4 times FY13 EBITDA, so still trading at a discount to its peers and wholesalers in the marketplace, but that trading halt in place, it's going to be interesting to see how Billabong shares trade tomorrow.